Imagine this, it's a quiet morning. You wake up in your suburban home, coffee brewing, birds chirping, your phone lighting up with notifications about the crypto market. Nothing unusual. You slip on your hoodie, head outside barefoot to grab the mail at the end of the driveway. Maybe you check your phone again, Bitcoin's up, your portfolio is looking good. Then suddenly, a van screeches to a halt, the back doors fly open, 3 masked men jump out, and before you can react, you're grabbed from behind, forced into the vehicle, a sack is pulled over your head, zip ties burn into your wrists. You try to scream, but the road noise drowns it out. No one sees, no one helps. You're not a celebrity, you're not a billionaire tech mogul, you're just a crypto holder. A name on a Discord server, a wallet address on a blockchain. But to them, you're a walking vault with no security, no insurance, and no backup plan. By the time you're in a dark room, wrists tied to a chair, cold metal pressed to your temple, you start to understand. They don't want your car, they don't want your cash, they want your seed phrase. This is not a movie. This is not theoretical. This is happening in New York, in Paris, in London, right now. Welcome to the era of crypto kidnappings. In 2025, cryptocurrency is no longer just a fringe asset. It's a global trillion-dollar industry. But with wealth and decentralization comes a dark side, a disturbing rise in physical kidnappings, extortion, and torture targeting crypto holders. These aren't hypothetical risks anymore. They're happening right now, from New York to Paris to London. Just last month in May 2025, an Italian crypto hedge fund associate was kidnapped in New York City. The case, which sounds like something out of a cyber thriller, has quickly become a real-world cautionary tale and a wake-up call for anyone in the cryptocurrency space. According to federal prosecutors, 37-year-old John Waltz and 33-year-old William Duplass lured the victim to Manhattan's Soho neighborhoods under the guise of a legitimate business meeting. Once there, they forcibly detained him in a luxury townhouse and held him captive for 3 weeks, subjecting him to brutal abuse in a calculated effort to steal his Bitcoin private keys. Over the course of the ordeal, the victim was beaten, electrocuted, urinated on, and forced to smoke crack at gunpoint. Oh, and of course, they threatened to harm his family unless he turned over access to his crypto holdings. At one point, he was tied up and dangled over a staircase as a form of psychological torture. Eventually, he managed to escape and alert the authorities, bringing a horrific chapter of a much bigger story to a close, but opening a new conversation about security in the crypto world. But aside from that, what makes this even more disturbing, 2 New York Police Department detectives have now been placed on modified duty as part of the investigation. One of them, a 20-year-old veteran of the force and a member of Mayor Eric Adams' Executive Protection Unit, was allegedly working off-duty private security for the suspects without departmental authorization. Even more troubling, this detective is believed to have personally picked up the victim from the airport and delivered him directly to the location where the kidnapping and torture occurred. An International Affairs Bureau probe is now underway to determine whether the detectives knowingly participated in the scheme or were unknowingly used as pawns. Either way, the breach of protocol by sworn officers further erodes the line between digital vulnerabilities and real-world danger. Now, we've seen this happen occasionally over the years, but as of recent, this isn't an isolated incident. We're witnessing a surge in crypto-related kidnappings and extortion schemes worldwide. Just weeks later, in mid-May, the family of Pierre Nozat, CEO and co-founder of the French cryptocurrency platform Paymium, became a victim of a brazen kidnapping attempt in Paris. Masked assailants tried to abduct Nozat's pregnant daughter and young grandson in broad daylight. The attack was unsuccessful thanks to the quick actions of the child's father and a bystander who used a fire extinguisher to repel the kidnappers. In response to this and other similar incidents, French authorities arrested 25 individuals suspected of involvement in kidnapping plots targeting crypto figures. In another case, the father of a cryptocurrency millionaire was also kidnapped in Paris, with his captors demanding a 5 to 7 million euro ransom. The victim was found days later with a finger severed. Furthermore, David Ballin, co-founder of cryptocurrency firm Ledger, was abducted as well, along with his wife in central France. Ballin also suffered a severed finger during a 10 million euro ransom attempt. Now, it's pretty clear that France has an issue, but this is happening globally. In Pakistan, a local trader was recently kidnapped and forced to transfer $340,000 from his Binance wallet. In Canada, the CEO of a major crypto exchange was kidnapped in downtown Toronto and released only after a $1 million ransom was paid. So we get it, bad things happen every day, but why is this happening and why is this happening now? Well, there are several key factors that are converging to create a perfect storm for crypto-related kidnappings. For starters, crypto is known for irreversible transactions. Unlike bank transfers, crypto transactions are final. There's no undo button, no fraud hotline, no reversing what's been sent. Once your keys are surrendered, your funds are gone. And while some might hold cash under their mattresses, that's not the majority. But the same can't be said for cold wallets, which is inviting physical pressure. Cold storage protects against hackers, but not home invasions. When your wealth is tied to a small USB-sized device, or even a piece of paper, it becomes easy leverage for criminals who are willing to apply physical pressure. And aside from that, you have a lot of high-profile victims and oversharing. Crypto culture encourages flexing screenshots of gains, NFT photos, and hardware wallets on social media. These posts serve as a beacon for criminals who can easily trace your transactions on the blockchain and track down your real-world wealth. Additionally, although most blockchains are on a public ledger forever, that doesn't take money laundering completely off the table. Once crypto assets are stolen, they can be laundered through mixers, privacy coins, or cross-chain swaps, making it almost impossible to trace. For criminals, it's the perfect storm for anonymity and liquidity. And unfortunately, we also have weak legal frameworks and slow enforcement. Law enforcement is still catching up. There's no FDIC protection, no uniform crypto fraud unit, and little legal recourse once your funds are gone. So now that we have a clear idea of what makes crypto a breeding ground for kidnappings, let's get a clear picture as to some steps we can take to prevent us from being a victim. For starters, the most important takeaway, you are your own bank. That means you need to think like a target and defend yourself accordingly. Here are a few practical steps every crypto holder should take. Stay quiet about your holdings. Do not disclose your wallet balances, recent gains, or investment activity publicly, or even to friends casually. Avoid oversharing online or offline. Consider SIM swapping protection, the first layer of defense. Your phone number is one of your most critical digital identifiers. It's often tied to your email, crypto exchanges, social media, and two-factor authentication. The truth is, if an attacker takes over your SIM, they can potentially access all of it. That's why companies like our channel partner Efani exist, to close this massive security loophole that traditional carriers have failed to address. Efani offers a 13-layer security stack, proactive SIM swap detection, real-time monitoring, and $5 million in insurance. They make SIM swapping virtually impossible, and they're a crucial piece of the security puzzle. If you want to level up your SIM security and your phone carrier game, be sure to check out Efani with the link in the description, and when you use that link or promo code DataDash, you will get $99 off your plan. Next up, consider using multi-signature wallets. Multi-sig wallets require multiple private keys to authorize transactions. This means if even someone gets one of your keys, they still can't access your full holdings. Another little tip, which I've done many times in the past, is setting up decoy wallets. Create a wallet with a small balance that you can give up if physically threatened. This burner wallet may satisfy attackers while protecting your real assets. Split and secure your seed phrases. Never store your full seed phrase in one place. Use secure vaults, split storage, encryption, or even trusted third parties, with caution of course, but consider tamper-proof metal storage over paper as well. You can even go as far as removing physical traces of crypto from your home. Do not keep hardware wallets or crypto-related gear in visible or obvious locations. If you're ever burglarized or kidnapped, your home shouldn't broadcast your involvement in crypto. And lastly, be unpredictable. Vary your daily routines, work from different locations, avoid establishing habits or public routines that make you easy to surveil or ambush. And another one I see time and time again, don't let people know when you're traveling, as well as being careful not to dox your home address by showing familiar landmarks around you. And of course, you don't always want to feel the need to look over your shoulder, but implementing at least some of these can go a very long way. But at the end of the day, guys, unless you can hire a security team of your own, it is up to you. You need to use encrypted backup keys, segment communications, practice physical operational security, avoid centralized risk points. If you're in the US, the Second Amendment is a beautiful thing as well. Because in 2025, the threat isn't just from hackers and hoodies, it's from rogue insiders, organized gangs, and people who don't need to know code to ruin your life. Ultimately, you need to think like a target before you become one. But I want to know some tips that you might have that I didn't mention in this video. And if you found this video informative, consider giving a like and subscribing if you haven't done so already. Thank you guys as always for watching, and I'll catch you in the next.